What's going on, everyone? It's Pablo, and welcome back to the channel. Today, we're diving deep into the world of investing, focusing on something that can seem a bit intimidating, but offers huge potential for growth emerging markets. Now, if you're looking to diversify your portfolio beyond traditional stocks and bonds, emerging markets could be your golden ticket. We're talking about countries with rapidly developing economies, offering potentially higher returns, but also carrying unique risks. Think of places like India, Brazil, or even parts of Southeast Asia. Over the next few minutes, I'm going to break down 10 strategies you need to know to navigate these markets successfully in 2024. And trust me, this stuff is pure gold. So grab a pen and paper, smash that like button, and let's get started. Now, you've probably heard the saying, don't put all your eggs in one basket, right? Well, in the world of investing, diversification is everything. And when it comes to emerging markets, this is even more crucial. See, emerging markets can be volatile. Think of it like a roller coaster. You might experience some incredible highs, but there are also bound to be some dips along the way. But that's where diversification comes in. By spreading your investments across different emerging markets, sectors, and asset classes, you're essentially creating a safety net for your portfolio. If one market takes a hit, the others can help cushion the blow. It's like having a diversified stock portfolio. You don't want to put all your money in one company, right? The same principle applies here. So remember, diversification is your best friend when it comes to mitigating risk in emerging markets. Don't underestimate its power. Let's talk about market timing in emerging markets. We all wish we could perfectly time the market and buy low, sell high every time, right? But it's incredibly difficult, even for seasoned investors. Emerging markets are influenced by global trends, political events, and currency fluctuations. Focus on what you can control your investment strategy. Think long-term and consider dollar cost averaging. Invest a fixed amount at regular intervals, regardless of market ups and downs. Remember, investing is a marathon, not a sprint. Now, let's talk about the exciting stuff, technology and innovation. This is where emerging markets really shine. We're talking about countries with young, tech-savvy populations, a growing middle class, and a huge appetite for innovation. This translates into incredible opportunities for investors willing to look beyond traditional markets. Think about it, mobile payments are exploding in places like Kenya and China. E-commerce is booming in India and Southeast Asia. These are trends that are reshaping entire industries and creating massive wealth along the way. But here's the key, you need to be selective. Don't just blindly invest in any tech company based in an emerging market. Do your research. Look for companies with strong leadership, innovative products or services, and a clear path to profitability. The same thing is happening right now in emerging markets. So, if you're looking for exponential growth potential, keep a close eye on the tech and innovation scene in emerging markets. Chapter 4. The government factor. How policies impact your investments. Now, let's talk about something that can make or break your investments in emerging markets. Government policies and regulations. See, government policies can have a huge impact on businesses operating in emerging markets. Tax laws, trade agreements, environmental regulations, these can all change rapidly and unpredictably, affecting a company's bottom line and ultimately your investment. That's why it's crucial to stay informed. Keep up to date on the political landscape of the countries you're investing in. Are there any upcoming elections? Are there any major policy changes on the horizon? These are all factors that can significantly impact your investment decisions. The more you know, the better equipped you'll be to navigate the ever-changing world of emerging market investments. Chapter 5. Going local. Understanding cultures and consumer behavior. Let's face it, what works in one market might not necessarily work in another. This is especially true when it comes to emerging markets, where cultural nuances and consumer behavior can vary drastically from what you're used to. Think about it. A product that's a massive hit in the United States might totally flop in India because of cultural differences or consumer preferences. That's why it's absolutely crucial to understand the local market conditions before investing in any emerging economy. This means doing your due diligence. Research the local culture, consumer habits, and market trends. The more you immerse yourself in the local culture and consumer landscape, the better equipped you'll be to make informed investment decisions. When you align your investments with these factors, you're setting yourself up for success. Chapter 6. Investing in a greener future. Sustainable projects in emerging markets. Sustainability is a global movement, creating incredible investment opportunities in emerging markets. Investing in projects committed to environmental responsibility, social impact, and good governance. The ESG principles. Developing countries seek sustainable solutions for energy, resources, and infrastructure. This creates demand for renewable energy, clean technology, and sustainable infrastructure. Investing in these projects offers solid returns and contributes to a sustainable future. Chapter 7. Don't get burned. Mastering currency risk in emerging markets. Currency risk can significantly impact your returns in emerging markets. Investing in a different currency means its value can fluctuate. Imagine investing in an Indian company with a 20% stock increase. But if the rupee depreciates by 15%, your return shrinks. Managing currency risk is crucial. Diversify across multiple markets to mitigate risk. Currency risk is real but manageable. Now, let's talk about a sector that's primed for massive growth in emerging markets: infrastructure development. Think about it. As these economies grow, so does their need for roads, bridges, airports, power plants, and telecommunications networks. It's a constant demand that creates incredible opportunities for investors. We're talking about trillions of dollars being poured into infrastructure projects globally, with a significant portion flowing into emerging markets. This creates fertile ground for companies involved in construction, engineering, materials, and logistics. Focus on companies with a proven track record, strong government relationships, and a commitment to sustainable practices. Infrastructure development is a long-term game. These projects take time to complete and generate returns, but the potential rewards are significant for those who are patient and strategic in their investments. Now, let's talk about something that can be a bit unpredictable, but plays a huge role in emerging market investing: geopolitics. See, global events, political tensions, and even natural disasters can significantly impact the performance of emerging markets. Think about it. A trade war between two major economies could disrupt supply chains, increase costs, and create uncertainty for businesses operating in those regions. Similarly, political instability in a particular country could lead to social unrest, policy changes, and a decline in investor confidence. That's why it's crucial to stay informed about global events and their potential impact on the emerging markets you're invested in. By staying informed, diversifying your investments, and being prepared to adjust your strategy as needed, you can navigate these risks effectively and position yourself for success in the long run. And finally, let's talk about the most important factor for success in emerging market investing: patience. See, unlike more established markets, emerging markets can be volatile in the short term. They're influenced by a wider range of factors, from currency fluctuations to political changes, which can create short-term ups and downs. But here's the thing: if you're in it for the long haul, these short-term fluctuations become less significant. Think of it like a ship sailing on the ocean. There might be waves and storms along the way, but the ship is still moving towards its destination. The key is to have a long-term investment horizon and ride out the inevitable volatility. Don't panic sell when the market dips. Remember why you invested in the first place: the long-term growth potential of these dynamic economies. So, be patient, stay the course, and trust in the long-term growth potential of these exciting markets. The rewards will come to those who are willing to wait. So there you have it, the 10 strategies you need to conquer the world of emerging market investing in 2024. Remember, diversification, research, and a long-term perspective are your best allies in this exciting but challenging landscape. If you're ready to dive deeper and unlock the full potential of emerging markets, head over to my blog at pablospinal.net, where you'll find in-depth articles, resources, and even personalized guidance to help you on your investment journey. Thanks for watching, and don't forget to like, comment, and subscribe for more videos on how to build your wealth and achieve financial freedom.